What up, guys? Welcome back to my channel. This is CJ Profit FX. Please, if this is your first time coming across to my channel, do well to click the subscription button and turn your notification bell so you'll be getting notified anytime I drop videos like this. Okay, in today's video, I want us to discuss order block. Now, an order block is a very good topic you should understand when SMC is concerned. You as an SMC trader that want to trade smart money concept, you should get familiar with order blocks. Now, the reason why you should get familiar with order blocks is the order blocks are those areas in which the institutional traders and some big banks place the huge orders. Now, for you to identify it on your chart, you should know the meaning of order block first. Now, I have a little write-up that will take you in on order block definition. Okay, now here I have a little definition that says what is order block. Now, an order block refers to the collection of orders placed by big banks and some big institutions in the market. Now, for you to understand this particular definition, you should know who are banks and institution traders. Now, in this scenario, these two persons or more than or big traders are in control of the market. So all these people are those that play the high role in the market because they impart much money into the market. You and I are just retail traders that want to make money in all means using the chart. Now, for you to start making this money using order block strategy, you must first of all understand what is an order block. Here I said an order block refers to the collection, or you call it an accumulation of orders, okay, placed by big banks or institution traders. Now we have two types of order blocks. Okay, in these two types of order block, we have the bullish order block and then the bearish order block. We have the bullish order block. We have bullish order block and also we have a bearish order block. And we have a bearish order block. Now, in bullish order block, you can see something of this nature where the markets arrange or accumulate at the upper side. Before you know it, there was a massive or an impulsive dump in the market. So this is a sign of a down continuation strategy or movement. So we have this area as a bearish order block, which every trader is expected to sell the market. Sorry, this is a bearish, sorry guys, this is a bearish order block, and you can see it at this area where the market is going to the downside, which every trader is expected to sell. And then we have the bullish order block. This is when the market is accumulating or ranging at the downside. All of a sudden, we see a push up to the upside. Here you have your order block. These are the two types of order block we have in the market: the bullish order block and the bearish order block. So at this area, at this point, you are meant to sell to buy the market, and this is how your setup should look like. You set your entry at the order block zone. Now, without wasting much of our time, let us dive in on how to identify an order block in the market. Before then, let me give you guys a little write-up that will take you in on how to identify a good order block in the market. Now, I have this. To identify order block in the market, in technical analysis, when a ranging market structure form, or price moves in a form of horizontal block, orders accumulate at that area. This entails that when there is a ranging in the market, all of a sudden there is a manipulation, there is a pump at that area. That area that seems to be a ranging market has generated a high volume of orders in the market. And then who are in control of this area? We are Who are those people in control of this area? We have the institutional traders and the banks and other firms. These are people that place a huge order in the market. And any area you see price ranging, just have the mindset that the institutional traders or some banks have started accumulating an order in the market. That's a simple and easiest way to identify where the market is keeping orders or generating orders in the market. That is a block orders. Now, for you to get this particular definition, also read an impulsive wave will form after orders accumulate and then break the block or price. This entails that when there is a ranging, the market might give an impulsive wave. That impulsive wave contain an imbalance, which entails that the market have violated the range. And the reason for the market to pump is because a high volume of orders has been placed in the market. And you notice the law of demand and supply. When there is a big demand in an asset, the price always increase. That's why you should have it in mind that anytime you see a ranging area where the market is accumulating, always know that something is happening at that zone. Just wait patiently to know if it will break upward or downwards. If it break upwards, start looking for a buy opportunity. Now in this scenario, I want to give you guys a little drawing that will illustrate how these other blocks look like. Now, when there is a ranging market like this, prices seems to be accumulating with a small candle. Then we might have a push up to the downside, to the upside, have a push up like this. So when you have a setup like this or a structure like this, the only thing should come into your mind that okay, the accumulation phase have been manipulated, in the sense that the top traders have entered the market and they've placed a big order. What you should have in your mind is that every trader will be making a decision to buy here. Then your job is now to follow them and buy here. So you take your TP to the upside, which the market tells you that we are going to the upside already. So what you should do then is to enter here and expect the market to move like this. Pick your entry and move. This is a good and understanding trick to trade order block. This order block strategy is very simple and understandable if you can only understand the logic behind this. Now, for you to identify a real order block, because we have a lot of order blocks in the market. Remember, order blocks are trap, because institutional traders can come and place a big order in the market just to attract you the retail traders. And if you are not careful, you might make an impulsive decision which is unnecessary. And once you make this decision, if they manipulate the market, you're going to lose your money. So in this area, you might have something of this nature where market accumulates to the downside and we have a push up to the upside. Let's say we have a pullback and the pullback gave you another order block before the continuation. Now, you as a trader, you want to enter the market because they are giving you a direction. The market are giving you a direction. You want to buy. What do you do? What you should do then is to know among these two order blocks, which of them has the potential, which of them is more stronger and valid. The answer there is you should avoid this first order block because it's a trap. It's a trap. The market can respect it for a while and still wipe all liquidity that is stacked there. So what you should do then is to consider the last order block which contain the high volume of liquidity as your main entering point. So at this point, you are meant to enter the market at this area. Take your SL below like this and then you target the next liquidity zone. Once you have your setup like this, the market might react at this first order block, move up, grab it and pick your entry at the main order block and then buy. That's a good trading strategy. That's a good order block trading strategy that you should get familiar with. Not all the other blocks in the market are valid. Some of them are invalid order blocks set by those traders or big banks just to manipulate your own action. So you should get familiar with this and it's gonna help you. Okay guys, let's go to a chart I made on this particular structure, on this particular pair, which is NZD-JPY. Okay, as you can see, I have NZD-JPY. I've been following NZD-JPY for a very long time. If you check, this is 4 hours time frame. Now at this point, I have this area as a protected point, which the market gave me when this structure formed. And I noticed at the protected point, there's another block. I decided to take the other block at 1 hour time frame. And you see how the market played out and gave us about 171 pips. So when the market dropped, I noticed there was a change of character at this area, which shows that the market have changed its direction. That means I'm expecting a bearish movement. So in this area, I went down as 30 minutes time frame and I got another order block around here. That's how I could be able to spot out this setup. So when I have this down movement, I still take the opportunity when the market put back to the upside and I enter the market now sold. This is a good and understanding strategy you should get familiar with. Trading with order block and market structure. Following the market movement and never go against the market structure. So the same thing happened here when the market dropped, it gave me a little range in here before the market moved to the upside and created another high volume of liquidity was generated here before the market sell impulsively. Remember the area we read where it stated that when there is a ranging before an impulsive wave which caused the imbalance in the market, is telling you that when there is an order block, it must be followed by an impulsive wave or impulsive movement. It might be upside or downside. That shows that that area has contained a high volume of liquidity, which every other trader should be targeting that area as their point of interest, and there's no two ways about it. So that's how I could be able to consider this area as my order block. And currently I'm on this trade and I'm going to hold it to TP. This is a good strategy you should get familiar with. Please, if this is your first time coming across to my video, do well to click the subscription button because I will be taking you guys on step by step how to trade SMC, most especially the new guys. Okay guys, as you can see, we are on profit already and the market have given us a good we are targeting 174 pips and we're going to achieve this, trust me. Thank you guys for watching this video. I remain your coach, the CJ Profit FX. Turn on notification bells so you'll be getting videos like this from me. Thank you guys.